All right. Forrest Wright from Startup Genome. Thank you so much for being here today and giving me some time out of your schedule on this 4th of July weekend. So pleasure to meet you. And we'll just talk about you today. So first, let me hand the mic over to you. Tell me about you and your role at Startup Genome.
So at Startup Genome, I'm the research assessment lead. And so what that means is I work directly with ecosystem leaders like policymakers, founders, kind of like people who connect, the ecosystem, including like people who were previous founders who are now kind of like giving back, and also investors, of course, kind of that whole network of people that make a startup ecosystem tick. I work directly with them, kind of assessing where their ecosystem is at, seeing where they're outperforming or maybe underperforming compared to peers, and then recommend some strategies based on what we've seen and the interviews we've done, the data we've collected. We present that back to the community, try to get their buy-in, get their feedback. I do that with probably 2/3 of my time. I also work quite a bit on the content side. And that's kind of like the benefit of being a small organization. You get a chance to put your hands in a few different buckets. So I worked quite extensively on our annual report this year, the Global Startup Ecosystem Report. And that involved, writing quite a bit, like the state of the startup, the global startup economy, and putting together a lot of the visualization and the insights for the report. So that's part of my duties as well. So I'll dip into the content side, seeing what's going on at Startup Genome. And I've been there for almost 2 years now. Before that, I worked at the Global Ecosystem Monitor. So that's GEM. And so that's kind of similar, more looking at entrepreneurship overall, kind of at the national level rather than the ecosystem level. So did that for about 7 years, and I was their data manager there before starting at Startup Genome.
Nice. Well, I'm excited to kind of get into all the details about Startup Genome, but that actually leads me perfectly into my next question of tell me about the origin story of Startup Genome. How did they start? Why? And what are they doing now, kind of all over the world?
So it goes back a number of years, over a decade now. And our two co-founders, JF Gauthier and Mark Penzel, they were central in the founding of Startup Genome. There were some other individuals as well who were kind of informing and mentoring them in this process. And really that motivation to start Startup Genome was, I think they saw a real lack of kind of, scientific rigor and sort of data analytical approach to what made startup ecosystems tick, and was there a science behind how could you improve ecosystem performance? So they did a lot of surveys, a lot of research and work around, the characteristics of a whole host of ecosystems. Of course, the ones that were most successful, of course, like Silicon Valley, New York, London, but also just a whole suite globally of ecosystems, kind of build out a picture of, where they all stood relative to each other. And that kind of work informed our first Global Startup Ecosystem Report. And that was actually 2011 or 12, I believe, the first one. Then there was a couple of years gap. And then we started doing it every year starting in 2015. So going back to that, era was the motivation was to address what was kind of an unscientific discipline, a lot of people guessing and bring their own sort of biases and experiences to that process. And so JF and Mark really wanted to bring a scientific rigor to that process. We built that out, year in, year out, improving our process a little bit more, tightening up how we do our analysis and integrating, some of the feedback we get. And, now we've kind of expanded beyond that. Of course, we do quite a bit of consulting work. So that's the umbrella I'm under. So that's, I've got a few colleagues who work with ecosystem, leaders doing the assessment of where they are and recommending policy interventions and strategy. We've also, I think, expanded our work as a research organization. So not just the annual report that you know, but a lot of our our special topic subcenter reports, like on climate tech we did most recently in 2023. And we also released a scale-up report, which was, I think, our most interesting report to date. It doesn't get as much traction as the annual one, but it really dove into, we leveraged our database of 100,000 surveys we had done with founders from 2015 to the present. We looked at a subset of that and looked at the characteristics of those responses to correlated to the likelihood that they would become a scale-up, those startup founders becoming a scale-up, which was a startup valued at over $50 million within the first 4 years. So I think that was really fascinating research, and has also informed some of our recommendations to clients on the consulting side as well. So yeah, we kind of developed a suite of different services and products now over the years. But of course, most people know us from our rankings.
Nice. Yeah, definitely the annual report is the big one. I've been following it since 2022, and we'll get into those questions in just a second. Let's just hop into it. For people who don't know, it's the Global Startup Ecosystem Report. Obviously, we just read the 2024 one. It's over 300 pages of just so much information. Just awesome to read through and see each ecosystem broken down. Some of the ecosystems like Sao Paulo, Brazil have, 2 or 3 pages just dedicated to them. And I believe it's, correct me if I'm wrong, over 300 ecosystems in 52 different countries.
Yep. Representing at least over 50 countries.
Yeah. So It's just really awesome to see that. And then obviously you can't record every single thing that you guys do over the year. You got to break it down and summarize it in this report. But it's so cool to see that these things are starting to take off. All the accelerators, incubators, government organizations that are really stepping up to grow their own ecosystem and their own Silicon Valleys in their own country. So I'm excited to see that and really start diving in, especially with this channel. Find all the kind of early stage founders in these different places and start getting their name out there and try to help them. But let's hop right into it. I wanted to ask, your opinions on, so we got, as I read the report, we got climate tech, fintech, and AI seem to be kind of the hottest tech sectors over the last year. So which ecosystems have really stood out to you as kind of leaders in these spaces?
So I think taking climate tech first, and I think what's actually emerged, and you can see this a bit in our most recent climate tech report, but also expanded on a bit in the annual report, is that Europe actually is taking a huge lead. It's actually outpacing the US in terms of growth of early stage funding. The US still has the most absolute early stage funding, so pre-seed, seed, Series A. But Europe, in terms of its growth trajectory of how much they're providing to their startups, is actually outpacing the US and China over the last few years. So if you look at places like Amsterdam, Stockholm, Oslo, they're not that, Amsterdam's fairly highly ranked in our annual report, but it's number 3 in terms of ecosystems in our climate tech ranking. And Stockholm's number 9 in our climate tech ranking. Oslo's number 10. And what you see is a real specialization and push within those ecosystems. They see that they have, a strong natural advantage, I think, because of the environment they're operating in. Of course, Europe has a lot of policies that are, a bit of stick and carrot. There are a lot of regulations. So a lot of corporations in Europe are looking for startups to help them, become a bit greener, so they can meet those, those laws and regulations around what corporates can do and what responsibility they have in the environment. So that's actually brought a lot of funding into those ecosystems. They all have specialized accelerators specifically for clean tech. And I think an example Oslo is a fairly small ecosystem overall. It's I'm not sure if it's ranked offhand in our annual report, but it was the number 10 in climate tech. And I think a big reason behind that is actually they really focus on their corporate and startup collaboration. So they have some programs specifically around that. And I think that's so critical in a space like climate tech and clean tech and energy, because there's, the overhead in these sectors is, so high. When you're looking at developing a new technology in clean tech, like a new type of energy source, or, cleaning up the ocean, using, biodegradable materials to do, to build something else. Those types of processes are very expensive and cost a lot to take to market and to, scale. So, where is that money going to come from? The VCs, they can, if they see a real opportunity there, but I think corporates actually, have that R&D, both the money, but also the know-how. And so I think getting the corporates involved in some of the ecosystems you see in Europe has really boosted them. I think the next one you mentioned, fintech. Of course, the U.S. is a big leader here. New York is, fairly dominant. Of course, because of the financial sector, there's a lot of talent there. But if you look at a place like Singapore, actually, it really stands out to me. I think what they've done really successfully is they've attracted a lot of startup founders in that fintech space. They have a lot of programs, to provide incentives for founders across the world to go into Singapore. And they have very, progressive regulation around that sector, around fintech, or actually around a lot of their startup subsectors, like, their autonomous vehicles. They have sandboxes in all these spaces where, founders can kind of experiment, find something that works that they probably wouldn't be able to test in like the US or Europe. And the same goes for fintech. So they have
Actually, I was about to ask, can you explain that a little bit deeper, what you mean by they're more liberal on fintech? What sort of laws or policies do they have in place that give you that impression?
So they, fintech sandboxes, you can basically operate where you have, it's fairly difficult to operate a fintech like in the US or Europe startup. The reason being is because you can't just offer financial products to consumers because the liability that brings. Of course, there's a whole suite of legal reasons why you don't really have time to dive deep into here. But some of those constraints, they are loosened. Not that you can just go and do whatever and scam people out of money in Singapore. It's more like there's set of banks allow a set of their their data to be used by some of these fintech startups, so they can start to test these certain products, make sure they're safe before they go to market. But that testing process is definitely accelerated in a ecosystem like Singapore. The exact legislation, I'm not exactly sure offhand in Singapore for fintech, but I know that actually I've looked into this for their autonomous vehicle sandboxes, which they're really liberal with their ability to test autonomous, self-driving cars and other types of any sort of mobility vehicle, within a constrained environment in Singapore, and they're really trying to be leaders in that. And so I think the next phase of fintech, really going back to that, is it's not going to be just like standard banking. There's going to be a lot more niche products that require a lot more testing and upfront development. So, a place like Singapore offers a lot of incentives and attractive, opportunities for founders to kind of play in those, in those areas and develop these niche products. And then you were mentioning AI as well.
Yeah, just the last thing on the fintech. It really sparked my interest. I'll definitely be looking more into that in Singapore. One, because I know they tend to be a financial hub for that region of the world. Yeah. And they also, in our Mexico episode, we talked to a few founders who they were talking about how fintech is having a hard time in Mexico because of the regulation put on fintech is the same regulation they use for their banking. So they're like, we can't grow all this new tech to help the banking because we're under such scrutiny. So it's very interesting. I'd be interested to compare and contrast those two. But yes, AI was kind of the last big subsector that has really taken off over the last couple of years, but especially this year, you can see it.
Yeah, and one last thing on fintech is one thing we've seen also in our consulting work is often the banks don't necessarily want new entrants in this sector. So part of it is it goes down the chain. It's not just about having the startups necessarily, or even having great banks. It's also about having the kind of policy buy-in for the banks to feel like, okay, they're not going to be like, they're not going to be the next one disrupted and they'll be out of business if these startups start to play. So there's a little bit. It's I think it's a kind of a messy area that it's there's layers to this. As in anything, anytime you're like working on the cutting edge of tech, there's going to be regulation and involved, and doing it smartly is ultimately the most critical priority for that. So yeah, going on AI, it's I wish I had slightly more interesting things to say, but it's really like a U.S. dominated, and this you can see this in the report. We looked at all VC deals and generative AI, Gen AI, and 65% of all VC deals last year were from startups based in the U.S. And of course, that's about capital availability, but also what you're really seeing in AI, and I think this is becoming a trend overall in startups, is more corporate involvement. And of course, about the huge $10 billion investments coming from Microsoft in the space and Amazon and Google. That's driving a lot of startups that come to the US, both because of the money you can get here, because generative AI is a very energy intensive activity and it requires a lot of servers. You need a lot just to scale it a little bit. But also I think, the corporates are interested because they can say, hey, we're trying to solve this exact business case. Can you help us with that? And I think that's also driving a lot of attraction to the US, because startups, they know that if they come here and work with a US corporation, their chance to scale that technology is going to be so much higher. Because if you work with a Microsoft, you're not just developing a product that would work in the US, but actually for half the world, because half the world uses Microsoft. So the opportunity to scale with a US corporate, I think it really makes it attractive. But there are some competitors like Mistral and based in Paris is also received a fairly substantial investment this past year. And DeepL both they're based in Germany. And so those are two European generative AI startups that became unicorns in 2023. And I think it'll be interesting to follow how they do, because there's a lot of questions over AI legislation in Europe, going back to the legislation and regulation question. It's still early days, so it's really hard to know exactly how it's going to affect them. There were surveys done about a year ago that showed a lot of European founders were nervous about this. And I think it's not necessarily the legislation itself, but sort of the confusion and sort of uncertainty that comes with the AI, your EU-wide AI legislation. How much are they going to be able to get done? How much do they have to register? And any sort of uncertainty can be a drag on startups. So interesting to see how they develop in that context.
Nice. All good points. All right. So like we just mentioned, climate tech, fintech, and AI, kind of the top three most dominant subsectors of the last year, probably 2 years. We've also seen these trends of cryptocurrency and blockchain technology really starting to come aboard. Not in competing with them, but also helping synergize them, especially in the fintech and AI space. So what would you, if you had a magic 8-ball, what would you say your predictions are for the next year on certain subsectors that might grow faster than you expect, or certain trends you're seeing? Maybe, it's just that AI is just going to dominate everything. I don't know.
Yeah.
What would you say?
Yeah. So, I think we are going to see, continued growth in AI. I mean, anecdotally, we still see large deals Picking up on a theme I mentioned earlier in the climate tech space about corporate involvement, I think that's going to continue to be a theme. I'm expecting to see that really in the next couple of years. And the reasons, kind of are the same here, where they both have the larger R&D budgets than you would get from a VC, but they also have that in-house expertise. They're working with engineers. They know what this technology is a bit better than, say, a VC investor would. And the amount of overhead that goes into like generative AI, these kind of cutting edge clean tech technologies, advanced manufacturing and robotics, that's going to be so capital intensive. And, as we've seen, there's been a real slowdown in VC activity as these new technologies are emerging. So I think we've already seen in our research, and we almost put this in the report, but we want to wait a little bit longer to get a little more clarity on if this is going to be a continued trend. But we are seeing more corporate participation in VC deals. So corporate VCs becoming a little bit more involved. But we also want to look at in the coming year, are there more deals struck, kind of cooperative deals struck between startups and corporates, which I'm kind of predicting is going to be a thing. Just because of the capital intensity of some of these cutting edge technologies. I think the era of software and platform startups, like the consumer facing, bring your groceries to you, get a car, those kind of thing, that seems to be on the going on the way out, in certain areas, like in the, like in India, that's still kind of driving a lot of startup growth because of where they are kind of in their phase of startup development. But really, like in the US, Europe, and China, it's about these cutting edge technologies that are going to require a lot more expertise, a longer runway as well. So, I think investors are maybe not the group you want to get money from if you're looking at a payoff of 20 years or even 15 years. Typically those VC funds run 7 years and then expecting an exit. And it's really hard to build a truly innovative scale up that's, based on, this cutting edge clean tech technology that's going to be able to exit in 7 years. So I think it's going to take a little bit of shifting of who the big players are in the next couple of years. I think those are the big themes I'm expecting.
So just to kind of give an example and question this a little bit. So here in Houston, oil is king. Oil, gas, and medicine is our industries here. As an example, Chevron has a venture firm that they started to invest in clean energy and other energy-related startups. Are you saying that you believe like a Chevron would make more investments in startups to own a piece of equity in them, as opposed to just a previously expected acquisition of them?
I think it's a bit of both, and then some. So I think you are seeing more corporate VC activity, just becoming an equity partner because they've observed that's a potential for them to grow. Their available capital, but also part of these deals, and you can't say every single one, but on a lot of those deals, part of that is the startup's going to be working directly with the corporate to develop specific needs. So like if Chevron is trying to build out some sort of solar cell technology as part of their energy portfolio, and they're working with startups, they'll be working directly with them, plus an equity stake. And some will be acquired and maybe some won't. I think it really depends on what makes sense for Chevron. Sometimes it just makes sense to buy the technology. It's going to be interesting to see as well, and I'm not sure exactly how this is going to play out, but a lot of startups don't necessarily have IP right away, and that typically makes a firm attractive as an acquisition candidate. So if they're working with Chevron, developing kind of IP in conjunction, how does that play out? What's the share there? Does Chevron just take it as an example? So I think these are considerations that will maybe start to play out in the coming years. It might be messy in some situations, I could see that happening. But I'm expecting a mix of them becoming more involved just on the fund side, the corporate VC, but also in those partnerships and collaborations, because they're going to be informing each other. I think places like the traditional oil companies, they have the money, they often have the engineering talent. They just they can't spend their time developing, these small kind of lab-based sort of experiments. So that's when they get the startup involved. Eventually, it'll become at the scale where they can kind of take it over. Whether that becomes an acquisition or a partnership, I think remains to be seen. But it's encouraging because you are seeing more activity in this space. And I think they have a bit of a longer time horizon. They tend to be a little bit more skittish, I've observed. So like when the interest rate scare was coming, in 2022, that took a hit on, VC across the board. And a lot of investors are worried about the Federal Reserve raising the interest rates. The era of cheap money was kind of coming to a close. Corporate venture capital really took a nosedive. And then it's kind of come back the last year to 18 months, particularly led by AI. But, so they're a little skittish, but when they're in, they're kind of there for the longer term.
Nice. It'll be very interesting over the next year or two to see which larger corporations like Chevron kind of branch out their own VC firms that are focused on their industry. So very excited for that. Which different ecosystems are you kind of most excited about for this next year, and different trends are you seeing?
So I'm thinking I'm really interested to see if Paris can capitalize on its recent success. It jumped up. It wasn't the biggest jump in our top 20, but it went from 18 to 14, just 4 spots. But a lot of that was led by this kind of emergent AI kind of subsector specialization we're going in. But I know that, typically what I find Paris to be so interesting is, we kind of associate with France with maybe a less competitive business culture, maybe a little less tolerant of cutting edge startup technology, but actually kind of below the surface the last couple of years, they've been doing a lot of strategic investments. They've rolled out their French Tech 2030 policy, which is a framework that has a lot of incentives and supports for startups. And they've got really great infrastructure and a lot of talent there. They're also becoming a little bit more, at this point, if you're working in the startup space and you're trying to raise in Paris, you're speaking in English. I think that's been actually a detriment in the past. A little bit of hesitancy to kind of just allow English to be the dominant business language, which is the reality. If you want to be globally competitive, that is the language of business, and eventually they're probably going to try to go to the US, so that'll be critical. So I'm interested to see how they do. I'm also hoping that the Indian ecosystems they had been performing well, particularly Delhi. In 2022, they jumped up 11 spots, I think they were number 20 or 21. And I think India is just a fascinating market because, the scale they can achieve at the stage they're in right now, even those we've seen a lot of unicorns being made there just because in the consumer sector, when they can achieve traction, their scalability is so high because there's so many consumers in India, and there's this surging middle class that's demanding more goods and more services. So I'm hoping that even though Delhi and Bangalore took a little bit of a dip last year, that they can maybe get back on track. And I think there's a lot of interesting ecosystems in the US. I'm thinking of places in the Midwest. Recently we've been working with Indiana, and we've seen their life science sector is really strong. But there's a lot of startups right now that are kind of as we've seen in a lot of ecosystems, they're kind of scaling and at a really great point, but it's a really tough exit environment right now. So I'm hoping that places like Indiana, in Detroit, some of these startups that have raised pre this VC winter we've been in, and showed a lot of great potential. In Detroit, they have their in their autonomous and new vehicle sector. Really interesting tech there. I'm hoping that they can, find their footing a bit here as well. And I think, it's definitely a policy priority of the current administration. You saw the Tech Hub awards that came out last week, where they awarded $700 million to a bunch of smaller ecosystems around the U.S. to build out their deep tech capacity. In like places like Tulsa, it was in autonomous vehicles. In Indiana's life sciences. There's in Houston, or sorry, in Wyoming, in Montana, they've got some clean tech up there. So there's, I think the funding is the intention is to build out these ecosystems, and I'm hoping that they can take advantage of this moment to build those out, because I think there's some really cool technology coming from there as well.
Nice. It'll be interesting to keep an eye on them over the next year.
Yeah.
All right, last thing, any final thoughts you'd like to share with the audience, or closing remarks, or anything else you just want to, keep an eye on?
Yeah, well, thanks so much. I would just encourage people to check out our reports. If you go to startupgenome.com, you'll see at the top, we do have a link to our annual report there, but we've got our special topic reports, and really our scale up report. I think if you really want to get nerdy with some interesting founder data sets, to check that out. And I think there's some great insights in there that founders can learn from as well.
Well, I definitely will be checking that one out too. Awesome. Well, thank you very much, Forrest, for the time. Yeah. And I hope to talk to you again next year with the next report, and see all the great work that you guys have done, and all the different changes and growth that happen around the world with, the next year of VC and investing and new founders coming on the scene. So it'll be awesome.
All right. Thanks so much, Grant. Have a great day.